differences, culture and understanding, I should say. You would say, okay, Latin America, it's a whole region, like they all speak the same language mostly, except Brazil. So it's kind of very similar, and actually it's not. So I would say, like, don't underestimate cultural differences between countries. At first, we learned this the hard way. We kind of have the playbook, and we use the same playbook from Argentina in different countries. We try to adapt it a little bit, but and it didn't work. And we actually needed to replicate and try to understand exactly like how the market was at that time, how mature it was, how prepared it was for the product we wanted to, how we needed to market that product, what kind of users expect from the product, and clients and corporate clients. So we needed to adjust not only for Brazil, but also for actually every single country. And that's the way we actually got our product to be much more, have a better performance. So don't underestimate this. And I think one mistake is also to think that if you have a regional team that could like actually cover for everything. I think sometimes you need to invest in local teams, at least one or two people, or at first to barefoot, ground yourself to that new country where you're going to launch, to help you meet and translate how things are done in that country. And I think that's kind of it. So the takeaway is, don't assume one size fits all models. You need to localize compliance strategy and regulation for each country, invest in local advice and expertise. You're going to need legal advice or technical advice to draft your regulatory map, sometimes before even your product map, regulatory roadmap, and be kind of flexible. Currently in Latin America, there's a lot of regulation going on. So you will need to sometimes adapt or readapt, or things that nowadays are not possible, like probably in a few months are going to be. So you should be also very flexible in the approach you're taking when landing. And I think that's kind of it, like the most important things I would say.
Perfect. Thank you. Thank you, Rocio, for that overview. So Inigo, from a founder's perspective, how did regulation shape your journey from Arcus to MasterCard? What were the toughest hurdles?
I mean, I think Rocio kind of shared a lot of kind of the overview of how, like, if you're in a fintech company, like regulation is a big piece. For us, when we started the company, Arcus, we tried to first we did stuff in remittances, and kind of we thought that innovating in fintech was trying to avoid regulation. So more like every service that we launched was, okay, we're doing these gift cards and we're sending a gift card, but it's not money, so it's not you don't need to do AML and those type of things. So kind of probably in the first 4 years we were trying to avoid regulation as much as possible. So every service that we wanted to launch, kind of a lot of it was, how can we avoid being regulated in the US or being regulated in Mexico? And kind of we were able to get some success, but not enough. And that's when I started to kind of get more educated about regulation. And eventually, one of the main reasons that Mastercard wanted to buy the company is because we had this license for Spain that allows to do real-time payments in Mexico. And kind of there was a big change overall for Mastercard, that kind of they wanted to do a multi-rail platform. So meaning going beyond cards. Visa kind of too as well with Visa Direct, and they were buying companies that were doing remittances and cross-border payments beyond cards. And when you start to look at a lot of those services, you realize that to be able to operate those services, you need licenses. In sometimes more than one license, and sometimes in more than one country, like Rocio and Pomelo. And if you don't have those licenses, you cannot really provide the service, and you cannot provide the service the right way. Meaning, yes, you can provide some solution, but kind of you cannot really solve the problem. And kind of I started to look at a lot of the companies that were successful. I don't know, when you look at Bitso in Mexico, one of the main reasons they were successful is because they were one of the few companies that have an e-money license, and kind of they took regulation early on seriously, and not just regulation, but compliance as well, right? And kind of for me, then at that moment, it clicked that kind of you want to play the game of fintech, you need to take regulation and compliance really seriously, and you need to make a big bet early on. And at least what happened to us, we were trying to avoid as much as possible. And then when we realized we needed to do it, compliance and regulation processes take 2-3 years, right? It's like a long process. We all wish that it was faster, but it takes time. And for me, it also helped me a lot to try to understand what the regulation is intended for and what are the concerns of the regulator. At the end of the regulator wants to protect the consumer, right? And kind of at least at the beginning, my approach was, no, regulators don't know, they're too slow, kind of they don't really understand what's going on, they're not technology savvy. And thankfully, after kind of many years, I started to interact with many of them. And I was surprised, and obviously super naive on my side, but like I was surprised how knowledgeable they were. And kind of when I started to understand what their concerns were, and kind of how they were trying to protect the consumer, and kind of try to avoid illicit activities to flow through these systems, started to kind of have a different lens. And kind of when we sold the company, again, one of the reasons I think we were able to sell the company to MasterCard was because kind of we were already taking those steps in making big investments in compliance and regulation. And kind of when I started my new company, Monato, the first thing that I did was start with the regulation. Like even before product, even before kind of hiring the first engineer, before everyone, I started to kind of file the different licenses because I knew it was going to take 2-3 years. And then kind of I started to build a lot of the other things. So contrary to my previous journey, compliance was the last thing. This time around, it was the first thing. So
Perfect. Perfect. So in the same questions, Inigo, what role did compliance play in scaling across multiple LATAM markets?
sorry, could you repeat the question?
Yes. What role did compliance play in scaling across multiple LATAM markets?
I mean, for us, kind of we tried to expand to other markets. So at some point, we were doing bill payment services that didn't require a license in many countries in LATAM. We only did licenses here in Mexico. We also tried to do licenses in the US, which, as Rocio was saying, every country is different, and kind of the complexity of trying to do regulation in more than 50 states in the US is super challenging. And the amount of investment that you need to do is also super tricky. Um, so kind of I don't have a lot of experience doing regulation in many countries in LATAM. I have deep expertise in Mexico. I think the good part of Mexico is a lot of the regulation kind of eventually countries adapt pieces. And when you, in my view, is like a lot of the logic is the same, right? If you're going to hold consumer funds, you need to do AML, you need to do KYC, you need to be able to prove that the funds of the consumer are safeguarded correctly, those type of things. But obviously, the fine detail of how every country operates is different. Now, at some point, we tried to do stuff in Colombia, and you have these like tax for moving money, and that was a big deal, right? Because if you were moving money but you didn't have the proper license, then your product will be too expensive. So then eventually you need to understand the fine details. But in my view, is more a matter of the approach to the problem. And I think a lot of the companies try to avoid regulation, and that's the approach. Doesn't matter what country you operate in. And that was me at some point, but now kind of I have this different approach that when I'm looking of thinking, when I think about expanding to somewhere else, the first thing that I think of is what license do we need, how long they're gonna take, how much money do we need to invest to be able to do it, because I know if kind of I'm not ready to make that big investment, then my product is just gonna be superficial, and I'm not gonna be able to really innovate or create something good. And maybe you can at the beginning, but if you scale, then you start to get in trouble. So probably Rocio has more experience than me on that part.
Absolutely. Absolutely. Rocio, in this case, do regulatory sandbox in LATAM provide meaningful opportunities for fintech innovation, or are they still symbolic in practice?
I think both statements are correct. I think regulatory sandboxes are undoubtedly a positive step forward, as they are a strong signal that regulators actually want to be engaged with innovation proactively. They don't want to react to it. They are trying to foster innovation while understanding a little bit more about the technology, about the business models, the new business models, etc. So I think it's a great way in a controlled environment to test the product for companies, also to know the market, to know the regulator, to have a better dialogue between both of them. There has been a lot of positive experience around the globe. There are more than 60 jurisdictions and 25 countries that have implemented sandboxes. Currently, there are almost 95 sandboxes undergoing. In the UK, like the country where everything actually started, they have reduced the approval time for participants within the sandbox. And I think this is an interesting data that 80% of the companies that enter the sandbox were still operating 4 years later. So I think it's a great tool. However, it has, like, the experience has been kind of uneven around the region, around Latin America. And it varies from country to country. And I think it is because for it to be a good tool or a tool to foster innovation and to be accepted by also the companies that want to explore a new business model or a new product, they should have into consideration a lot of things. Like, I think one of the hardest, like the most important concerns for a company is how long does the sandbox last and how clear the exit from the sandbox is. And why I mean this is because if you participate for like the sandbox is only for 1 year and you make a lot of investment, and then after a year they say, okay, so you cannot keep on conducting these activities in this territory, then it has all been for nothing. So I think the most successful sandboxes that I've seen around the world, but also in Latin America, are the ones that have a good exit. And what I mean by this is either the regulator provides extensions for the product to keep on knowing how to regulate it, and after the sandbox, there's a new regulation for that specific business model or product, or else they try to make you adapt to an existing license, for example, that it's already existing in the market. So if you don't have a clear exit, participants are not very interested in this. And actually, with Pomelo, we've explored 5 years ago, when banking as a service in some jurisdictions wasn't regulated and wasn't that common. We sat with some regulators and we actually explained to them how it works in Brazil, how it was starting to work in Argentina, and we were thinking of exploring a sandbox, but the conditions were not there. There were a very short period of time with no possibility of extending that time. The exit wasn't clear. The investment we needed was too high, and the control environment reduced a lot the volume of transactions that we could do. So it actually didn't make sense. For example, like as a successful experience in Brazil, when I was at Mercado Pago, actually Mercado Pago filed for one of the calls that Brazil made 2 calls for sandboxes. Just like it's not an open sandbox like the UK, where you can present your project and on an ongoing basis they will review and allow you to participate in a sandbox environment. In Brazil, they called to action and they selected with specific criteria some participants to participate within a period of time of 2 years, I think it was. For Mercado Pago at that time, for one product they wanted to test, it was actually a really good experience. And there were many projects that after that experience actually kept on with a better understanding from regulators and how to supervise them. So I think that was a great experience. There were some jurisdictions where the sandbox, and they were very pioneers. I think Mexico was one of the first countries in LATAM that had a FinTech law, and one of the first sandboxes that was created, but it had a little adoption. And I think it was because it was kind of complex, the process, the sandbox process, compared to other jurisdictions. But I think, there's a clear intent of the regulator to foster innovation and try to understand a little bit more about technology. Like Inigo said, I mentioned before, I think, and they know what projects actually failed. So they actually really can help you. And together you could see them as a partner, and they can help you actually build a better product, a better business model for that country. So I think, in short, the sandbox is designed with clarity, transparency in the selection of the participant, adequate timeframes, and that are also flexible and with continuous monitoring and supervision. And for this, you need a lot of resources. Many countries in Latin America don't have enough resources to do this. So that's why sometimes they could fail. I think more or less, like, those are kind of the most important things sandbox should have. So it could be both. It could be, coming back to your question, it could be a really good tool, but you need to regulate it accordingly for it to be adopted by participants. Otherwise, nobody's going to be interested in participating, which is what mostly is happening in LATAM.
Right, I get it. So Martha Polanco, she has a good question, and I'm sure that many of us have the same question, which is, could you explain what is a sandbox?
Sure. A sandbox, it's a tool that governments have where you can test a product, or you can test a business model you want to launch. So a company can participate if it meets a criteria selected by the regulation in place, and test that product or that environment, or that business model in a very limited environment. What I mean by this is that, for example, you don't have a license to conduct those regulated activities or supposedly regulated activities, but the government, what it does is it requires you to limit your operation. For example, it asks for some guarantees, some insurance, particular insurance that you should have, specific structure, and then you can test for, depending on the country and the sample of this, but within 1 year and 3 usually they take. And in that time, you don't need to pursue a financial license. And the idea is for you, for companies, it's great because you get to test the waters, you get to see how that market fits with your strategy, and also test the product and see how the product is going in that specific market without having the investment of going or running through a specific license that actually doesn't fit exactly what you want to do. The other alternative is that you cannot do anything because it's a prohibited activity or something like that. So kind of the government, what it gives you, it's a permission for you to conduct that activity within specific conditions. I think more or less covers it, but it kind of creates a balance between protecting consumers, but as well fostering innovation. So it's a tool governments have to kind of find something in between, so that entrepreneurs can also be able to launch products without having a regulatory license or going through a process that is really costly. It takes a lot of time, and then funds are scarce. So yeah.
Perfect. Thank you, Rocio. And Inigo, what are common mistakes you have seen startups make when navigating compliance in Latin America?
I made many of those mistakes. But I think the main one is that people don't take it seriously, and then they get these legal opinions from lawyers that say that what they're doing is not regulated, and kind
Right.
of they don't even take the time to really read the regulation. And for good or for bad, when you read the regulation, is broad enough. So if they wanted to, everything is regulated, right? Kind of when you read the definition of money movement, kind of it's too broad. It's like someone that their daily activity is in the purpose of moving, like moving funds or moving kind of value, right? So then, kind of a lot of these regulations, they're broad enough that a lot of the use cases that people claim they're not regulated, kind of they could be regulated, right? So then, kind of and it's okay in some cases to like if you want like some people decide to like be aggressive and kind of launch with something with the claim that what they do is not regulated. But I think financial services are a little bit different than other type of tech products where this vision of break things and move fast or move fast and break things. I'm not necessarily sure that it always applies. I mean, some people have done it and it works and everything is fine. But at the end of the day, when people do those things, you end up having these historic stuff that when you want to kind of get your record straight, the regulator looks at your history and they realize that kind of you were playing dumb and that you were doing all these activities that were not properly kind of compliant. um, and then in the long term, that makes your life much harder. Like when you look at some of the fintechs in Europe for a long time, they were struggling to get the bank license, right? And even though maybe at that point they were complying with everything, historically maybe didn't kind of, or and it's a perception thing, but sometimes the regulator feels that you were not taking it seriously, and then they make your life much harder. So, in summary, I think that regulation is important. Many people don't think it is. So, they try to play around the bushes and try to say, we're not regulated, so this doesn't apply to us, or we're a foreign entity, so this doesn't apply to us, or we're doing crypto and that's not regulated, so this doesn't apply to us. Kind of, but they didn't even take the time to read some of these things. And if, when you read it, kind of it's too broad that you realize that it could apply, or in many cases it does apply to you. Um, and then what that happens is kind of how do you kind of make these long-term investment? And the other one is that many people like launch quickly and they don't start the process of regulating themselves or getting the license early on. So then what happens is you scale your business, which I mean, part of the strategy sometimes maybe you start with a credit product. I don't know, like Plata and Story, they start with a credit product that in Mexico requires a lighter license. And then once they scale that, they apply for a banking license or a SOFIPO license because they wanted to kind of expand their product offering. And that was, I think, a smart move because they were able to launch fast. So you always need to do this trade-off of speed plus kind of how compliant and regulatory heavy you want to be. And if you haven't scaled, it's really hard to have the investment to cover all those things. So kind of having that foresight to plan ahead. And what I see a lot of companies, they quickly launch, then they realize that they need a license. So they're scrambling and they end up buying stuff and they pay a lot of money to buy the license. And then they need to fix whatever they bought. So then they kind of get themselves in these complex situations that if they were able to plan ahead, I don't think they will be in that position. But at the same time, it's really hard to do those plannings because kind of right now, for example, we're applying for a license that is going to take 2 years. Like startups in 2 years, many things change, right? Maybe the reason why you were getting the license doesn't apply anymore, and those type of things. So it's pretty kind of challenging to have that foresight because a lot of these processes take 2, 3 years, and you need to make the decision today for something that you're going to need in 2, 3 years, and having that vision is challenging, right?
Get it. So now in this session, um, this is part like building trust and partnership. And there is a very important question here. to Rocio. From your legal experience, what should US and Canadian banks look for in potential LATAM fintech partner?
I was here in Inigo and I was here reliving everything I lived in the past 4 years with Pomelo. Applying for licenses, but then the strategy changes and you need to move everything around. So really good insights. Particularly on partnerships, I think, as Inigo was saying, like you could go with, that licenses are going to take maybe 2 or 3 years in most of the countries. So how can I accelerate and speed my time to market? And I think looking for a good partnership, it's a way of doing that. You start to build your reputation, your brand, your credibility, while you decide if you want to invest and go through and run a process of your own to be able to conduct the activities without a partner. Obviously, for some companies, it makes sense. For others, even in the long run, it doesn't. And what would I like? Well, I will check many things, but I think like the most important ones would be financial soundness. So if it's costly to integrate to a partner, a fintech or a tech partner. So if you know that it's not healthy financially speaking, that it's going to be turned off in a short span of time, it's a lot of effort that doesn't make sense. And also related to this kind of what reputation they have. So in the market, like you should have some references of that partner. You can talk to current clients, past clients, and I see even with Pomelo, a lot of new clients request references of other clients so that they can actually have an honest reference on how we perform. I think it's really important. And then the technology. So if the solutions they are like offering is something that you could see that are API first, cloud native, AI powered, everything that you will need for them to be able to adapt rapidly to new coming regulatory requirements or even business requirements. So I think that type technology is key. And then nowadays, I think also their approach on security and cybersec policies for the fintech and financial services industry is key because of the sensitive information and also like the consequences that it could have for the user experience. So I think it's important because it could affect you. A cyber attack would affect you operationally. It could affect your reputation and your trust of your users, and also your financial. Obviously, generate you a lot of financial losses. So and you're still not fully operational in the country. So it's very important that your partner has a good approach on cybersec and security policy. So I should also check on that. And two other things, well, as Inigo mentioned, compliance, it's key. And if you choose a partner that's non-compliant, that it's not in their DNA, in a highly regulated industry like fintech, it's definitely not going to look well in the upcoming future. Reputation again, and then scalability. If you're seeking to go to more than one country, probably it's a good idea, at least at first, to have a partner that could provide that service in many countries. It could be more cost effective and more efficient. Actually, that was the thesis of Pomelo's founders when they launched Pomelo, right? Because for issuing cards, you would need a different processor in every single country, and it made costs higher. It made the time of integration much higher, every negotiation. So a partner that could provide you scalability also is something that I will look to. And I think those are mainly the key points that I would seek for a partner in LATAM.
Perfect. Thank you. So to Inigo, this question: when building Arcus, what convince banks and investors that your compliance strategy was trustworthy?
Again, I think the bar is super low. So at the beginning, like just the fact that you're taking it seriously, it's like the bucket of people that take it seriously and the bucket of people that don't. My first one, I was in the one that don't. Then we moved to the one that we did. Um, and kind of for me, at least in Monato, like the fact that kind of I went really deep on this process. And one of our biggest selling points for investors was the fact that we had these, I'll say, regulatory sequence of how we were getting different licenses and what, and how we were launching and enabling different products as we were evolving. And kind of we were able to articulate why this was important. Obviously, kind of, and like in the case of Pomelo, like the fact that kind of they hired Rosito, probably it's like a selling point, right? For us, and eventually in a lot of fintechs, like really good investors, what I've seen is that they want someone in the team that is senior enough for like compliance or general counsel, um, because they know it's really important. It depends on the stage of the company, but in my view, the early, like if early on, if you bring someone that is capable, that kind of knows their stuff, it becomes really critical. At least for me, I know it's one of the big selling points, the fact that we understood this thing on regulation and compliance, and we had a plan on how to attack it. And this plan, in a way, was kind of made sense, and we could articulate how we were going to get licensed in the next 4 years, and kind of what was the right order to do that. And at the beginning, I will come into the meeting saying, "Oh, we're innovating these things, so we don't need the license." And now, looking back, probably people were laughing at me, but I thought it was super smart for because we had this innovative way of doing it. As kind of we evolved, it became a really big part of our strategy, and is one of the central pieces of what we're doing. So, and obviously, if you complement that with people on the team that know, and that are senior on that level, I think that um, I'll say that's the winning strategy in my viewpoint.
Perfect. Thank you. So, Rocio, in those aspects, how can cross-border financial institution align on risk framework effectively?
Um, I think a practical step would be adapting global best practices while tailoring for local regulatory requirements. What I mean by this is try to speak the same language. Banks, fintechs, understand and be consistent. I mean, which are the risk taxonomies, KYC and AML processes, clear escalation protocols. And for this, when I mention global best practices, I mean, for example, in terms of AML, GAFI or FATF recommendations, there are 40 plus 9 recommendations, and that's the baseline for every AML program everywhere around the globe. So if you apply that global benchmark, then you're probably going to be aligned. Same for risk management. So if you look at ISO or COSO, you're also going to be a lot aligned if you use that as a methodology for risk assessment. And there are some certifications as well, like for specific, for example, Carnival PCI DSS, which actually is a requirement, but also you will know that you have a similar security standard as well. So I think it's kind of to do it effectively is to tailor your company and try to seek for those global best practices in every single aspect of on regulatory matters that it could affect your business or your product. I think that's the best approach.
Great. Thank you, Rocio. So I think that this could be the last question of this round. To Inigo, what advice would you give to executive looking to position compliance as a competitive advantage?
I think it is. So, I mean, just by looking at the examples, right? Like the most successful company in crypto in Mexico right now is Bitso, and they were really big on compliance. And kind of when you look at a lot of the companies that have succeeded on fintech, I think it's because compliance and regulation was a big deal. Um, I mean, yeah, it just at the end of the day, it's a regulated service. So kind of fintech people usually believe that it's more tech than finance, and that's why it's called fintech. It's not just tech. And the finance piece, the main part, apart from the numbers, I guess, is that to provide financial services, you need different type of licenses, and compliance becomes really hard. And specifically for Mexico, if you look what's happening this year, like three major banks lost their business because an AML issue, right?
Mm.
So I think specifically today, AML is more important than ever because of what's happening with the US and Mexico and LATAM. And I'll say more specifically to Mexico, I think for the next years is going to be a really big thing that, in my view, imagine that you did everything well for the last 20 years, and then you have a compliance issue and you lose the game. I'll be so frustrated because of it, right? And there's so many examples, right? Like one of the people that was on our team kind of was in world first, that at some point Ant Financial wanted to buy them and the US didn't let them. So kind of you look at a lot of these things with financial services. My view is that compliance and regulation is a centerpiece. It's not a satellite that you can just do whenever it's convenient. Kind of when you look at these banks in Mexico, they had a really big business. So, and from one day to the next, everything went under, right? So for me, that tells me that compliance is a critical piece, and at least for me, it's something that kind of keeps me up at night, because also the fraudsters and the people that do illicit activities, they're super creative. So, and it's not enough to say that you tried some things. Eventually, if you're not able to really combat these people, and they're able to kind of find workarounds or work around your infrastructure, maybe not in the short term, but I think in the long term, it's going to kind to bite you. Um, I mean, some people take the approach of launching quickly and being aggressive on the growth and then fixing compliance after. I think
Mhm.
if you take too long, I'm not saying some people, it's just the appetite of risk, but like if you take too long, then eventually you can get in really big trouble and it becomes a really big headache. So, um, yep.
That's a good point. Yeah, absolutely. So I think that this is the last question. And before jumping to these questions, um, I want to know. I'm sure that the people attending this event, uh, they may have some questions that want to ask you directly. So it could be like we can jump into 15 minutes into the breakout rooms, so they can get to know each other, and they can ask you directly questions. And this last question is for both. What is the one key compliance insight every US and Canadian executive must know before expanding into Latin America?
Um, I think we already ran through this through the whole conversation, but
Yeah.
it's treat compliance as a growth enabler, not a cost center. Do invest in a robust compliance program and structure, and that would be the key for me to success in your regulated activities in Latin America. Current frameworks on compliance and AML are evolving very quickly around Latin America nowadays. So if you don't invest in a good structure and also team and compliance team, you're probably gonna have a lot of struggle along the way. I heard Angela Strange. For those of you who don't know, is an angel investor in many big and successful companies. There's a podcast that that she was invited to a Wharton podcast, I think it was. And she said, and I use this for negotiating a lot of things with my boss, the CEO at Pomelo, and it's that she said that investing in your regulatory team, whether it's in compliance, it's in legal, or whichever team it is, but in your regulatory strategy and your regulatory team, it's kind of, it makes a whole difference, and it's the key to success. So, and I truly agree with this. It's kind of what Inigo and I were saying all along. So pick your market wisely, adapt your compliance strategy along the way, and I think that's kind of on my end a big differentiator from a successful project, and one that it's going to have a lot of struggle with reputation issues, or even to be able to raise capital. If you have an AML or compliance issues with any government authority, it's going to be hard for you to have investors backing you up in subsequent stages of the company. So I think that's kind of what I can recommend on my side.
Inigo, would you like to add something there?
No, I mean, I think that we already kind of, compliance is important, and especially if you want to play this game in FinTech.
Perfect. Thank you so much.